CEO Andy Jassy did highlight around $187.8 billion for revenue. That was a 10% year-over-year jump. Would it have been about 11% if you excluded the naturally occurring headwind from Forex? Operating income, though, rose by 61%, and this was hugely attributed to the strength of the Prime membership as well as the same-day delivery expansion and cost reductions within their fulfillment network. However, they did also note that advancements in AWS with about $115 billion annualized in their revenue run rate and about a 19% year-over-year jump. That focus has really become on custom AI silicon, including the Trainium 2 and upcoming Trainium 3 and 4 chips to enhance the cost efficiencies of its AI workload. Now, what was so hugely critical was its outlook. They did guide for first quarter of 2025 sales to fall between 151 to 155 billion, incorporating about 2 billion in Forex headwinds and about 1.5 billion versus the impact we saw last year. So first quarter operating income expected to fall between 14 to 18 billion. Changes in server and network equipment useful life along with early retirements are also expected to have a degree of an impact right now on operating income now in the coming year. So all this being said, I think that the slight disappointment was really read through by the fact that AWS is expanding, yes, operating income. It's trying to reduce its cost controls, but the fact that right now you have Capex and AWS that are facing supply constraints, that's not super positive. Also, the fact that, well, we have seen these cost reductions play through with their supply chain, you also then have an international business that's trying to grow. That remains expensive. Well, they did highlight the holiday shopping period that was really one of the strongest ever. So there's really different takeaways here, and I think that that's why we look at these Mag 7s and so many different of their components, because of the fact that you have an e-commerce business that operates entirely different than AWS and entirely different than their logistics business, and the list goes on and on. So unfortunately, it seems like the result is getting more of a Microsoft Alphabet type reaction by the street today, but we'll obviously have to see where we open. Mixed picture. There's definitely things to like still, but the read has been so overall negative so far.
Yeah, well, it's interesting. I don't think it doesn't look like it's going to be treated quite as bad as Alphabet was off the back of their quarterly earnings. It obviously looks like it will be ding today, and their miss wasn't as bad as its peers on cloud. And then looks like they talked about, really, in other words, it seems like this is just the capacity to meet the demand for AI. So that stands out to me, because one of the things that we've seen within the AI growth story is there is so much demand, and so it's a challenge to, kind of scale to meet that. But then their Capex stands out to me. I mean, spending plans to spend about $105 billion in Capex this year. That's a huge jump over last year, Jenny.
It is, and it's also significantly above what we've heard from most of its peers. So that maybe is also leading to some scrutiny, because I know that we tend to like Capex when it's seeming favorable for the company and it's working out in their favor. But the street also punishes these figures. They get too aggressive, and that's pretty aggressive of a figure.
Yeah, that is aggressive. Anything that you're seeing in terms of any analyst commentary off the back of these numbers from Amazon, Jenny?
So it does seem like sentiment is still, pretty positive. We have Evercore ISI highlighting Capex, AWS constraints, but also really highlighting the way that this annualized Capex is expected to continue into 2026, driven by their pretty sizable AI investments. Also, Goldman Sachs right now was one that was inquiring about some lowered AI costs, which they did say that the Trainium 2 is expected to have right now these custom silicons that could be available for another cost. Of course, a nod to DeepSeek and some of the pricing concerns of AI. Well, Morgan Stanley was one highlighting the robot scalability and the profitability impacts, which the robotic segment of this company is also another huge component that we hardly even discuss because it's someone in the background. So the street seems to right now have a relatively strong view. If you were a bull, you seem to be holding on that conviction today.
Yeah, it seems like that. And just seeing minutes ago, Rosenblatt maintaining their buy on Amazon, raising their price target to $287 a share. So, the view still seems pretty constructive around Amazon, although the stock set to get dinged today. Jenny Horn, markets correspondent, thanks a ton for the breakdown on Amazon.